How's it going? I'm Andrew with Investors Hub, and where's the SPY going to go next? And that's what I asked Jea Yu. Jea Yu is a day trader. He writes for Market Beat. He's on the show quite a bit, and I'm curious to see what he thinks. Are we going to see a $450 SPY or a $390 SPY first? And he's also got some strong feelings on what happened with AT&T and some of the decisions that their new CEO made. So yeah, if you like the video, be sure to like, comment, and subscribe. Share it with somebody that you know, and let's hear from Jay. Please note that our videos are not designed to be direct investing advice. We're here to gather the perspective of different investors. Our channel and our content should just be one stop on the journey of trying to find out where to put your money. So Jay, what are we going to see first? A $390 SPY or a $450 SPY?
I like how you gave me those parameters. So what I think is gonna happen is, you've noticed when we get sell-offs, everyone panics. Like, oh wait, is this the end? But the dippers keep coming in. So as far as the downside on the SPY, I don't see any lower than 397. As far as the upside is concerned, I see 440 to 450. So to answer your question, yes, we will hit the 450 before we hit 390. First of all, thankfully, the last sell-off that we've had, it finally kind of locked the NASDAQ and the SPY together. Now they're both moving up together. They're both selling off together. There was a dislocation or a decoupling between the two. Between the SPY, the Dow, and the NASDAQ, you would see the NASDAQ down 200 and the SPY up 5 and the Dow up 150. But now they're starting to kind of move like they normally do historically together. It doesn't mean every sector is going to move. The bottom line is if the SPY gets juiced higher, it's likely because of the financials, the banks. The banks are getting pushed up, right? If the NASDAQ sells off, it's likely because the chip stocks are getting sold off. So it's usually one or the other. And then the FANGs, you can throw those in there. Ultimately, I mean, it's always like a tier system that changes every day. So if the banks are weak, then they're pumping the retailers. All right. If the retailers are weak, then they're pumping the banks or they're pumping something. The consumer, the cyclicals or whatever. If the chips are weak, but the NASDAQ's still pumping, they're pumping the social media stocks. They're pumping the FANGs. The most heavily market cap weighted stocks are what you got to pump in order to pump the index while you're selling off all the little guys. So a move to 450 on the SPY, yeah, likely that's going to hit first, and that's based on the monthly charts and how far the SPY or the benchmarks pull back. But you got to understand, a lot of the times when you see the benchmarks moving up, they're selling off a lot of other sectors or industries. Like, for example, today we had a nice big fat rally. But if you owned Macy's or even Target, any of the retailers, you're like, what rally? They're selling off into everything that I own. So you got to keep in mind that you still have to be very selective, when it comes to comparing the benchmarks to whatever you own. So diversification, obviously that's key. So you're able to catch every move to the upside.
So I'm a relatively new investor and I don't have a huge breadth of knowledge to draw upon, but there's just something about the market right now that's scaring the hell out of me, right? We're at ridiculously huge levels of quantitative easing. Money is ridiculously cheap. There's been all these stimulus packages. And so the market feels really, really propped up, like it's going to fall apart at any second. And I can't picture any good news coming from the Fed, right? Because the crisis that caused them to go into overdrive with the quantitative easing is slowly fading away, right? And every time we hear from the federal government or some news document gets released, the whole market goes, and then it goes up and down, right? Because they're just waiting for them to announce interest rates going up or some other quantitative tapering happening. So is there any possibility of more good news from the Fed? And what are your general ideas on that?
When I was a kid, there was this show on TV called The Great Space Coaster. And there was it was a GNU, I guess, and he called himself Gary GNU. And he had this saying, no GNUs is good news with Gary GNU. So It's funny that you mentioned that because that's how melt-ups happen. The bad news is obvious. All right. Fed's going to start tapering the balance sheet. Fed is going to raise interest rates. All the fears that are out there. And you've heard of the saying, the market likes to climb a wall of worry. So the absence of good news, as opposed to there's so much bad news out there. All right. So it goes back to what I said before when it comes to price, and it applies to every asset, stocks, indices, whatever. Okay. It's first and foremost, you got your narrative, you have your sentiment, and then you have your price. Okay, narrative impacts the sentiment, that impacts the price. But the funny thing about this, the three musketeers there, is that the price, if the price starts going extreme to one end or the other, that will completely reshape the narrative and obviously the sentiment. So the way melt ups happen is because the narrative may suck, the sentiment may be bearish, but the price just keeps rising and rising and rising. So the whole old adage of seeing a glass half full or half empty, right? If the glass may be half empty, but if the price continues to rise, all of a sudden it's half full based on, oh, what does the market know that the public doesn't know? There's news coming, so all of a sudden you have this anticipation of news coming. Now, on the flip side, this is how crazy the markets are. It's, when a good catalyst may come out, then the market may sell off, and that applies not only just to the benchmark indices, but every stock. Kohl's, they came out with their earnings, blew out the numbers. Not only did they blow out the numbers, they raised their estimates for 2022. Stock sells off. Why? Because it was climbing the wall of worry. It was rising, rising, rising. And then so the typical excuse, it's like you can have a rebuttal book saying, oh, why did it go down? Oh, because it was baked into the price, it was all baked into the price. So after the fact, there's always some excuse you can give. Now it's probably Kohl's is probably going higher, retail stocks are probably going higher. What we have now is a melt up. So when you get a series of days or weeks where you get that sell off, sell off, sell off, and then all of a sudden, they've either stopped out or they're just, on the edge. And all of a sudden you just get that melt up. That's what tends to happen, in December. It tends to happen in the summertime. So right now we're the worst is behind us in the near term as far as the NASDAQ. So now we have a melt up. The other thing is when companies come out and they actually put that barrier out there, while we have a global chip shortage, well, that's bad news, man. Sell everything, right? So good companies can do that. They can actually shape the narrative by actually putting the barrier right in front of you and saying, this is why we suck this quarter. No, not enough shipping containers. 40% of our stores in India and Europe, they're still temporarily open or closed. So you have all the negatives that automatically become catalysts for a spring-loaded coil. When the chip shortage starts to die down, stocks will rally. Any company that says we would have done this, but we have a chip shortage, but look at our backlog, that's beautiful. It's a trap. Stock sells off, and the smart money realizes, oh, they've lowered the bar. Let's get the minions, the sheep, to panic out, and then once that barrier, we got our shipping containers, we got our supply chains fixed, we found new suppliers, or hey, we're vertically integrated, we've made that, whatever. But you put it out there, because these analysts, they're not that bright. You got to put it out there and say, well, this is why we suck this quarter. But when you put it out there, you automatically set the milestone and the benchmark so that when it's relieved, the next quarter, they come right out and start upgrading the stock. So a lot of companies, they're very skilled with that. Even look at Ford. That stock has just continued to rise. They came right out and said, hey, we have a chip shortage, we have to stall out production in this plant for so many days. Stock sells off initially, but then what do you think happens? Ultimately, that supply chain, the semiconductor shortage, they're going to get their chips, and when that happens, boom, it's spring-loaded coil. The smart money gets in before that and sells into that. So it's, like I've always said, you almost have to be like the Rock and speak in third person. How would you normally react, and then what would you do 3 steps afterwards.
So you were telling me about AT&T before. You have some strong feelings about what happened?
Let me tell you, and I got to hand it to Jim Cramer. All right, I'm not the biggest fan, but when he put John Stankey and the other CEO on the wall of shame, I'm like, he gets it. He absolutely gets it. I mean, you're talking about a management that is late to the party. That's the best way I can put it. Late to the party. They talk about, well, you got to think long term, not short. These guys, they're going to reset the dividend, meaning they're slashing the dividend by 50%. I wrote articles about AT&T and how I think the number one IP in the world is the Marvel comic universe, the MCU. When AT&T bought Time Warner, and they, as you recall, they had fought the Justice Department, they fought Trump, they spent $85 billion to buy Time Warner. The synergies were going to be so great, right? And what they did last week is an embarrassment, right? They decided to spin off Time Warner because they overpaid on the 5G spectrums. By the way, during the auction, they're spinning off Warner Media, okay, which is HBO Max, DC Universe, and combining it with Discovery, all right, for a separate entity. And that separate entity, they're going to own 71%, and Discovery's going to own 29%. And they think they're going to unlock value. And they said, yeah, we get to write off 43. We're going to get between cash and stock, mostly stock, all right, $43 billion to wipe down the debt. And this is how goofy Wall Street is. They bought Time Warner for $85 billion. They're basically unloading it for $43 billion. They're patting themselves on the back, saying, yeah, we're going to cut our debt load. Well, now, who's paying $43 billion for you guys to wipe the stuff off your books? DCU, they were finally starting to get their act together. HBO Max finally starting to get some steam. And what does Time Warner do? Or I'm sorry, AT&T. They take probably the number 2 IP in the world, and they don't care about it. They don't care about it, and they just roll it out into a separate entity so that they can get the stock. And once they unload that debt, then they want to get their bond ratings up. So to do what? To issue more debt. It's a never-ending cycle. So I agree with Cramer. This management, and to be Stanky inherited a bunch of crap. He inherited $85 billion for Time Warner, $45 billion for DirecTV. All right. So yeah, he inherited a bunch of crap. But when he talks about we're not going to cut the dividend, but we're going to reset it next year after the new entities formed, which is going to slice the dividend by 50%. He lost faith. You talk about a management that says thinking long-term value. Well, long-term is just a destruction. Shareholder value, absolute destruction. I've never seen a management so incompetent. And to throw away probably the second greatest IP, just to throw it away like it was nothing. It's mind-boggling. It is absolutely mind-boggling. So anyway, where were we?
So, do you own any positions in the companies mentioned?
Absolutely not. Never. No way. I'd probably short it, but the stock moves so freaking slow.
Hey, thanks for watching. And be sure to like, comment, and subscribe. You can follow us on Twitter, ihub_vision. That'd be pretty cool. And I'll see you again soon.